How's it going, everyone? So right now it is currently Sunday. The market has just opened, and I wanted to make this video to just show you guys how I necessarily identify a narrative or how I build a context for the week going forward. It's really simple. You're just looking at the state of delivery. So for many of you, you know me as an order flow trader. However, for this specific video, you don't necessarily need any of those fancy order flow indicators, right? Delta clusters, delta profiles, volume profile, and so on. This is enough. What I want to show you guys is the market moves in two stages of delivery. On the candlestick chart, remember, the candlesticks, they happen as a result of order flow. So order flow isn't some holy grail. I'll be honest with you. Order flow isn't some holy grail. You could pretty much identify balance ranges with a normal candlestick chart because how the candle moves is already an indication of the order flow, right? So when you're looking at basic auction market theory, you have two stages of delivery, and it always goes back to this. It always goes back to the two stages of delivery. So if I find your brush, right, you have your balanced state of delivery where passive sellers are protecting that level, passive buyers are protecting this level. And then eventually one side gets more aggressive and breaks out. This is your imbalanced state of delivery. But when you're looking at it from an auction standpoint, this right here is key. This means there is acceptance, and whatever price is happening here, for example, like let's say $100, both buyers and sellers are satisfied at this level, and that is where the most volume is being transacted or facilitated, and the market is most optimal within this balance range. Hence why it is a balance range. The market is balanced, so there's no need to continue higher or lower, right? So when you have that, this is where building a narrative becomes extremely simple. All you are trying to identify is areas of consolidation. So let's start with the daily. Or, in fact, we could even go on the weekly. Multi-time frame analysis. Here's what you currently have. If you look at this structure over here, there is a consolidated price range. This means there wasn't a clear one-sided direction here. Anytime you had a one-sided direction, it was quickly followed by the opposing side stepping in. Bullish candle, bearish candle, you have multiple bullish candles, but this was pretty much like the move from here to here, right? The majority of the move was pretty much reversed within one candle, one weekly candle. So, it's very clear to you that this is a consolidated price action, which means on the weekly time frame, within this range, both buyers and sellers are satisfied. They don't necessarily want to continue higher or continue lower, right? If you look on the order flow chart here, you're just going to get absorption. And at the lows, you're going to get absorption of the sellers until eventually one side gets more aggressive. When one side gets more aggressive, when one side is no longer satisfied, that is where you get that large displacement move lower. And then the question becomes whether we can find acceptance at the lows or not. Or, if we break to the highs, whether we could find acceptance at the highs. If we can't find acceptance, then this becomes a rejection. And now this means aggressive buyers are very easily able to take back control. So on the order flow chart, this is just going to be an exhaustion and a potential selling absorption below here for whatever reason, right? Nothing is random. Nothing is ever random within the market. This was just previously a consolidated range. Come back, failed to find acceptance. Sellers failed to take back control. Sellers failed to hold control. Aggressive buyers step back in, they take back control. It's as easy as that. And as a result, because these sellers within the leg lower fail to find acceptance, they are pretty much exhausted. And especially the sellers below here, they become trapped or absorbed. And then aggressive buyers take back control pretty easily. So the stop losses from the selling downwards, they will feel the move and feel the pump higher, which is what you get here. And then eventually, when you come back into a balanced range or a balanced state of delivery, you're going to get two-sided price action again. It's as simple as that. You will always get two-sided price action or some sort of a reaction every time you come into the initial balance range, which is exactly what you get here, right? When you come up, sellers start to try to step back in. You have a couple candles that are pretty small in terms of range, right? Specifically looking at these three candles over here, that is a consolidation. On the lower time frame, that is going to be a consolidation. Like if I replay back to here and then show you guys on a 4-hour, you can see it was pretty much just a prolonged consolidation for around 20 days, right? Nothing is random within these markets. Nothing is ever random. So let's leave that. But eventually, buyers are still able to hold control because the overall narrative, using your mouse, like anytime you're unclear with a narrative, just use your mouse or zoom out. It's clearly bullish. So you're going to have anticipation of the range high being broken out, which is exactly what you get here. Until now, the new range, the new balanced range shifts higher. This is what you call a healthy trend. When you have trending markets like this, so if I show you right here, make that white so everyone's able to see. If you have consolidation within these stages, right, you get a retracement, price starts to consolidate around, that is a healthy trend. If you have something like this, where it pretty much just shoots higher, you barely get minimal retracements, that is an unhealthy trend, because the whole move higher was pretty much dominated by one-sided price action. There wasn't enough time for the market to, auction two-sided price action. There wasn't enough time for the markets to test for two-sided price action. So if you draw out like the volume profile, this is just, where's the brush tool? Where did it go? Right here. Volume profile. This would have been like just a really low volume node. So the entire move up is going to be inefficient. You don't have any balance efficiency over there. Whereas with this price action, this is where you get your balanced price actions, right? Because during these balanced ranges, the volume nodes are going to increase. And this is going to be a healthy volume profile as opposed to this one over here, where you pretty much just have low volume nodes for the majority of the move higher. That is inefficient prices. So anytime you have this is a healthy trend, right? Anytime you have the market expanding higher or expanding lower, and you find acceptance at higher prices, that is an healthy trend. So this balance range shifted to this high over here, because that means both aggressive sellers and aggressive buyers agreed on this price. And then you get the same thing again, right? Rejection. Aggressive sellers get more aggressive. They fail to find acceptance. Buyers take back control. And you break above our range high. And that brings you on to the current price action. So this is what you have. You have this consolidated range. And it's pretty much like pattern trading works, but you need to understand the theory behind it. This is the same as this. This is the same as this. This is what you're getting. Balance range. Acceptance is finding higher prices, right? Well, higher prices are being found with acceptance. Higher prices are being accepted, sorry. And then aggressive sellers, they try to take control, but they fail, they get rejected. Massive aggression from buyers here. Now, what would you anticipate? For all-time highs to be our next target. If we don't consolidate around here, that is. Right? But let's see what it does. If you drop down now to the daily, it's the same thing, just on a fractal standpoint. In fact, the daily, there's not much difference, because you could just use this entire range, and then this becomes your reversal pattern, and then, this is what you have right here. A miniature accepted range with aggressive buyers taking back control here. So what would I be thinking going into this week? Something like this to happen. Potentially consolidate and continue higher. If it becomes a problem, if we come up above here, which is how we're doing right now, and buyers get absorbed at the highs and they get rejected lower, back inside the range. This becomes a problem because now we're going to probably just range again within August's price action and potentially continue lower if aggressive sellers take control. But when you're in a range, it's going to be two-sided. There's no clear one-sided direction, so you can't tell for sure whether we break above the high or we break below the low. Right? You can't tell for sure. So that is what that's like a very non-ideal scenario for me. Ideally, I just want price to expand higher. Right? Thursday, we had that expansion higher. Aggressive sellers tried to step back in on Friday, but they were unable to bring price back inside our range from the start of August. Right? So that is already a good sign. If they're able to hold this level, if aggressive sellers get absorbed, if aggressive buyers are able to step in and follow through, then we're looking for higher price action. And that is what I would anticipate going into this week based on everything we've had so far. And that's pretty much, in a nutshell, how I would build my narrative. You're always looking for the balance ranges, right? The balance range determines everything. Don't focus on the expansion. Don't focus on the reversal. Focus on the balance ranges. Where are we finding acceptance? Where is the market getting accepted? If it is getting accepted higher, so consolidated ranges are consistently moving higher, then you have, a bullish narrative. If it's the opposite, for example, if now you had this, and then the market starts to consolidate around here, then that's not good. that is not good for higher prices. That's why you want to see a quick rejection, like how we got it here, like how we had it here, and how we had it over here, right? These are your best scenarios for higher price action because the market is finding acceptance with higher prices, right? So, hopefully you guys find this video helpful. Good luck trading for the week. And yeah,